Great, thank you, Mara, and welcome everybody. My name's Nick Lee. I'm the Director of Authorisation at Abu Dhabi Global Market. So over the course of the next 25 minutes or so, I'm going to talk you through, give you a bit of an introduction in terms of ADGM. Then I'm going to give you what is my personal view in terms of banking and payments and the future ahead. And then I'm going to talk a little bit about what we at ADGM are doing in terms of APIs and our digital sandbox, which I think is a regional first for a regulator. So firstly, Abu Dhabi Global Market, who are we? So we are a relatively new international financial center that's been set up in the heart of Abu Dhabi, the capital of the UAE. Our purpose is really to try to help the economy in Abu Dhabi and the UAE in general diversify away from reliance on hydrocarbons, and also to capture some of the economic flows that currently go overseas to other international financial centers, whether they be London or New York or Paris or Singapore or Geneva, to actually bring those back into this region. So that's our purpose. ADGM is actually three authorities. It's a registration authority, a commercial licensing authority. So we sit on an island in the middle of Abu Dhabi, and on that island, if you want to do commercial business, you have to have a commercial license from our registration authority, regardless if you're doing financial services or non-financial services activity. We're also a financial regulator, which is where I work. So any financial institution wanting to set up in ADGM has to be authorized and supervised by the FSRA. And we are a risk-based, principles-driven regulator and also a technology-driven regulator as well. We are made up of regulators from in the region and around the world, from the UK, from Singapore, Australia, obviously GCC as well. And hopefully we bring together some of the best thinking in terms of forward thinking in terms of regulation as well. And also finally, we're also a court. The law for civil and commercial matters on ADGM is English common law, and we have the world's first e-court. So if you do have a case and you're based in Abu Dhabi, a commercial dispute, for example, you can have your case seen in the courts with the plaintiffs being in different parts of the world. Someone could be in Singapore, someone could be in London, judge could be sitting in Australia, which we believe is certainly a world first and certainly a regional first. So we're looking to leverage off the strengths of Abu Dhabi. We've brought common law as a central part of what we offer in terms of financial services. And that was incredibly important from the feedback that we had when we were setting up the center. So just to give you an introduction by the numbers, been in existence now for about 3.5 years in total. We've got 105 financial firms that are now authorized and up and running within ADGM. About 23 billion of funds under management on the islands. That's growing considerably and has been over the course of this year. We've got 5 of the biggest global banks have set up operations in ADGM, and Citi are actually bringing their regional booking center to ADGM as well. And we've also got, we're very active in the fintech space, and I'll talk about that in a second. We've actually got the second busiest regulatory sandbox in the world after the one in the UK FCA. Also importantly as well, we've got 2 money service providers plus a number of digital remittance companies, some names have been bandied around here this morning already, who are prospective applicants to come into ADGM, which we think is a great thing and could prove to be a real disruptive effect in terms of the UAE remittance market. So I've said we're a technology-first regulator. We believe that actually what could be achieved with financial technology will really be enhanced if we can collaborate, and that's if we can collaborate across geographical jurisdictions, if regulators can collaborate, if fintechs and if incumbents can collaborate as well. So we have built an ecosystem, a fintech ecosystem at ADGM where collaboration is actually at the heart of that. Now, obviously, as a regulator, we can control some of the policy issues, and we can set up fintech-friendly policies and regulatory sandboxes and digital sandboxes, but we also see our role as working very much with the incumbent firms, but also with the fintechs and the investors and with the government authorities in Abu Dhabi and the UAE to provide a vibrant fintech ecosystem. So that's probably enough in terms of ADGM for the time being. Let me now talk about the future of banking and payments. And look, this is my view, right? It doesn't necessarily mean it's an ADGM house view, but it's certainly my view in terms of the experience I've had in this sector over the course of the last 20 or so years. So the first thing to say, it's a fast-changing world. I think we all get that right. Banking and remittance looks very different to what it did at the turn of the millennium. And for those of you who don't like change, well, I think I've got some bad news. I think it's only going to accelerate further. Accelerate further as we find further enhancements in the digital universe that could benefit banking and customers and remittance customers as well. So I thought I'd start really at the highest level possible and give you a bit of a snapshot of, this is a list, basically, of the most valuable companies in the world. So you have a list here in 2007, top 10 most valuable companies in the world by market capitalization. You can see there's, in the yellow highlighted section, there's only one real technology firm in there, which is Microsoft. If you fast forward 10 years, go to 2017, and the situation changes, right? 7 of those companies in the top 10 most valuable companies in the world are tech or data companies. And actually, you can see that the oil companies have dropped out. What's also really interesting as well is that 2 of those are based in China, Alibaba and Tencent as well, who've joined that list. So a phenomenal change in terms of what could be described as the most valuable commodity in the world. Used to be oil. Now, it's looking like very much it's data and it's technology. And it's the companies that are able to utilize that data and technology in terms of customer experience, profitability, and revenue maximization. So that's the most valuable companies and a real shift. What I thought I'd also give you, we're here to talk about remittances as well. And I'm not sure if you can quite read that in terms of the contrast on the screen, but let me just talk you through it. So this is basically showing the number of cash transactions by value in billions of dollars, non-cash transactions in terms of remittances. What this is showing you is basically a significant growth. Cash is no longer king. These are non-cash transactions that are growing across the world by about 10 to 12% per annum. But what I think is really interesting is in the, let's call it the more mature parts of the world, North America, the developed parts where banks are already pretty well established, that's actually growing at a much lower level, 6 to 7% a year. Where there's real growth, real expansion in terms of digital payments is actually particularly in the Middle East and North Africa areas, Central Europe, and also the emerging Asian economies of the likes of Philippines, Indonesia, Vietnam, Thailand as well, where actually there is a fundamental shift away from cash and a fundamental shift towards digital payments. So what does this mean for the banking models and the remittance models of the last few years? The guys are there already, and you'll excuse my rather crude picture here. What you have is a picture of the dinosaurs being wiped out by the meteorites, and then a rather crude analogy of me going straight to an iPhone. But this is basically a fundamental shift. There has been and will continue to be a fundamental shift in the business models of the banks and the remittance companies over the course of the next 10 years. Now, I'll give you some examples from the UK, which is where I was originally from. 2010, there weren't really that many mobile applications for banks. A lot of online banking was done on people's desktops. Obviously, with the growth of iPhone and other smartphones, the banks saw an opportunity to move a lot of that customer interaction onto mobile smartphones. What does that mean? That has meant that a number of banking transactions, retail banking transactions that happen in the UK has changed considerably. It's changed from people going into their branches or even going onto their desktop to actually accessing those retail banking transactions through an app. And it's estimated that by 2020, 75% of all retail banking transactions will be done through a smartphone, which is a significant shift, a fundamental shift in how people do their banking in the UK. What does this mean for the banks? Well, it means for the banks that they've had to shift their business model. UK, there was probably in 2010 about 12,000 banking branches across the whole of the UK, all of the banking branches added together. By 2020, the estimate is around about 5,000. So over half cut in the number of banking branches there are in the UK, which actually means that the way banks interact and work with their customers and their clients needs to be significantly different. So what about the role of fintechs? Again, you probably can't see for the contrast exactly what this is, and some of you may have seen this slide before. But I really like it. I think whoever came up with it, wasn't me. It's a great slide. This is basically the log-on screen for Wells Fargo's internet banking in the US, and the firms that are all around the outside of the log-on page are the fintechs that are all looking to take a tiny piece of slice of the value proposition for that bank. And you can see there's significant numbers of them. They're all trying to take just a little bit of the value chain from Wells Fargo. So the question that I always pose is, look, are the fintechs actually going to compete directly with the banks? Or actually the reality is that the fintechs are going to collaborate with the banks? So I have my own ideas, which I'll talk about in the next couple of slides. So for me, in terms of banking, what is it going to look like? Well, there are some fundamental technology changes that are going on. Ali spoke about artificial intelligence, but also about data. So if you think about it, a bank actually has a phenomenal amount of data about its customers. It can probably tell, if you're a client or a customer of a bank, it can tell probably when you go on holiday every year, approximately what time, probably where you like going to. It can probably tell through the data that it holds whether you're planning to get married or maybe get divorced or whatever it may be. But banks hold huge amounts of information, more probably than any other organization on the planet in relation to us as individuals. The problem has always been for a number of banks that they're working with old or outdated information systems. But what we're starting to see with the new banks and the digital banks coming through is actually they're building their banking platforms to harvest this data. And they see this data as being an incredibly valuable commodity. Now, particularly in markets where there is open banking, and I'm talking here probably more about the EU, but coming to other jurisdictions across the world, if you bring that data together, ways of mining that data and understanding that data in a lot better ways than we do at the moment, together with the advances from machine learning and artificial intelligence, means that in an open banking world where your banking data, if you agree as a customer, is open to a number of fintechs, could actually mean that banks actually turn themselves much more into platforms. So a little bit like Amazon does, Souk in this part of the world, where they will sell you a good or a product from their own warehouse, from their own supplies. But they will also advertise on their site goods and services from other suppliers. And Amazon doesn't really mind. Look, great, it would love for you to buy directly from itself, but it also makes a cut revenue as well if you buy from another supplier on the Amazon site. So it makes money out of that. And my hypothesis is this, is that banks, particularly with their new systems and progression in terms of technology, will partner with the fintechs. Some of the fintechs are able to do things very, very well. They usually do one thing, and they do it incredibly well. Universal banks usually do 100 things, and let's be honest with you, sometimes they don't always do it fantastically well. But the future will be very much in the line of that the banks will offer themselves as a platform with trusted suppliers and partners, offer you as a customer not just their own products, but lending or savings products or TransferWise was mentioned before, remittance businesses from other providers as well, but make a cut on those payments too. So which hopefully, sorry for my crude slide at the bottom here, if you add all this together, you get to a point which suggests that there is a happy customer. So I've mentioned Amazon, and I've mentioned that that's my view of where a number of the banks will be heading in the next 10 years or so, becoming platforms. But it's also worth looking at what's happening in China, which I mentioned at the very start of my presentation, and also what's happened in Africa as well in terms of remittances and payments. So if you look at Tencent and Alibaba, if you look at WeChat in China, yes, it's a chat platform, but actually it's also a payments platform as well. Ant Financial runs something similar, kind of a combination between a social networking platform, but also a payments platform as well. And the volume of money that goes through these platforms is absolutely phenomenal. Similar in Africa, where you had Vodafone through M-Pesa, kind of leapfrogged the banking system in a way. In that part of the world, the banking system isn't particularly well developed, and a lot of people don't have bank accounts. But through technology and through mobile technology, Vodafone, through its M-Pesa application, was able to just leapfrog those banks that are there to enable safe and secure payment between people in one country. So in the past, in Kenya, you would have to pay by cash. There would sometimes be a lot of robberies. People would lose the money. They'd have to travel large distances to pick money up. Not needed anymore. Through technology, they're able to send money over the mobile network, and it's safe and secure, and they can be sure they can buy and sell goods, and the payment will be received. Since when I put these slides together, actually something hadn't happened, which happened last week. I'm not sure if many of you picked up on it. But Facebook actually announced a bit of a pivot itself in terms of its strategy. So obviously, Facebook, incredibly successful social network. But what it's decided to do is instead of putting all the data out there in the public, it's actually going to focus much more on private data. I think it's actually going down the route that WeChat in China is followed. And through its Facebook Messenger apps, through WhatsApp and Instagram as well, it will be developing private networks which will allow you as an individual to send payments over those networks. They're already trialing this in India, but it shows a real change and a real pivot for Facebook away from the open information, open technology, to much more of a private platform to, again, take some of those revenues that are there in terms of payments. So to sum up and bring everything together in terms of this part of the presentation, there's probably three key issues that are changing across e-payments and digital banking. Firstly, client demand. Millennials, the next generation, incredibly tech-savvy, able to operate the technology almost seamlessly, and they're not particularly brand loyal either. We also, customers and clients are demanding straight-through processing and an immediate payment. If you're in a world where you actually say to your bank, oh, I need to send some money overseas, or even in my own country, and they say, well, it's going to take 3 days to do. Why does that need to take 3 days? People are demanding actually much faster payments now than they ever have previously. And mobile and digital is absolutely everything. In terms of technology, well, I've got a list here in terms of cloud and open data, AI and crypto assets. And I think actually in terms of crypto assets, stable coins for me, particularly in the remittance part of my discussion, is probably going to be absolutely key. And also competition, and obviously this is a part that regulators play, opening up the market so new and innovative firms can come in and really disrupt. And I think that we're also seeing that in a number of jurisdictions across the world. So the last few slides from me really are around ADGM and its own approach to open banking and data as well. So what we have decided to do at ADGM, we've got a traditional regulatory sandbox. I mentioned that we've got 26 odd firms. It looks very much like the sandbox that's, I'm sure, in Bahrain and no doubt in Saudi and in London and in other parts of the world. What we've actually decided to do is actually develop what we call a digital sandbox. So this is where, move on to the slide. This is basically where global startups and incumbents, through our own digital platform that we will host probably on the Microsoft cloud, will be able to interact with each other in a safe and secure environment. So this will enable global startups, you could be in any jurisdiction in the world, and also incumbents, again in any jurisdiction in the world, to really test out these new fintech solutions to see whether they can be successful in terms of the problems that some of the incumbents are facing. It's going to be a testing environment. There's not going to be any live data on there, but it's a way, in a safe and secure environment, that the global startups and the incumbents can come together to see whether that new technology, those new ideas can be used and utilized. And the way that we're doing that is obviously through the cloud hosting of the digital sandbox, but also through APIs as well, which are incredibly important. But APIs aren't new, right? They've been around for a long time. But our view is actually that we need to standardize them. We need to make them safe and secure. And we've spent quite a bit of time trying to understand the risks of APIs. and then trying to come up with some standards ourselves in terms of security, authentication, and safety to make sure that where these companies are swapping information through their APIs, they're able to do that and rely on that. So our digital sandboxing is going to be a robust open data landscape which firms are free to apply for. Obviously, they need to go through an authorization and assessment stage to make sure that they fit in the sandbox. But once they're in, they can then test their technology and sell their technology onto the incumbents. So as a case study to prove that this works, we went to the Singapore FinTech Festival back in November, and we took one of the new banks in ADGM, the world's first actually digital trade finance bank, fully digital trade finance bank, and we were able to show through the use of APIs that the Middle East bank was able to connect a seller in Singapore and a buyer in Abu Dhabi, utilizing APIs in a seamless way in a very short period of time. So the bank was able to onboard the seller using an eKYC platform in Singapore. They were able to also send the documentation that needed to be sent in terms of the trade finance system, and the payment could be dispersed incredibly quickly. We did that by utilizing our digital sandbox and also the digital marketplace in Singapore, utilizing APIs for that Abu Dhabi bank, Anglo Gulf Trade Bank, to pick out an eKYC provider in Singapore and also a payments provider in Singapore as well, bring them on board and ensure that the transaction could happen incredibly seamlessly. So that is it from me. I'm more than happy to take questions. It's been a fairly quick run through in terms of what we're doing. Oh gosh, there's some, so I can't see from here. We have a lot of questions. Oh gosh, we might be up here for a little bit longer. Okay. Yeah, that's right, don't worry. Oh, they're there, right. So there tends to be an opinion that regulators can't keep up with technology innovators. What's the key to keeping up? Yeah, that's a really good question, right? And I think in the past it's fair to say that certainly in some jurisdictions that regulators struggle to keep up. The pace of technological change is just phenomenal. But you need a regulator that is engaged, and you need a regulator that has the right expertise to keep up. So at ADGM, we're a technology-first regulator. And we try to employ people from around the world who are very focused in this space. So the digital sandbox that I talked about is actually an idea from one of my colleagues who joined us from the FCA in the UK. He couldn't actually do it in the UK for various reasons, but he could bring that idea to Abu Dhabi, and it could be done in terms of Abu Dhabi. But regulators need to ensure that they've got the right culture and the right mindset to engage with technology. If you don't, it's going to be incredibly difficult. Which tech advancement do you feel will really disrupt the banking sector in the next 2 years? In the next 2 years, I would probably say the API, depending if there's an open banking environment, I would probably say APIs and the ability to share data across banks to fintechs, for me, is probably going to be the most disruptive. Which tech, oh, that's the same question. How can traditional banks use tech to link their bricks and mortar with a digital platform, or will bricks cease to exist? That's a really good question. So it's always phrased from where I'm from as bricks and clicks, right? You know, do you have a model that is just digital, or do you have a model that is predominantly bricks, branches? Now, it really depends on the business model of the bank itself. There are some banks that will always have branches, and quite rightly so. A lot of people still want to interact with their bank on a personal basis. It's just I see that the number of branches that there are will diminish over time. They're just so incredibly costly to run, and actually you follow what the client wants, really, right? And most people, certainly in the jurisdictions that I've worked in, like doing their banking on the phone. I personally haven't visited a bank, other than opening an account when I got to Abu Dhabi. I had to visit the branch and take my passport and other things. I haven't actually visited a bank branch in about 5 or 6 years, and I've got no intention. I've got better things to do with my time than go to a bank branch when I can do everything on the phone. What's going to be the role of humans in banking as AI takes over? I hear white-collar jobs are now being replaced Who is left as a workforce? Well, perhaps it's the robot that we saw earlier, or Sophia, if any of you ever seen Sophia the robot, is the future. Look, no, I think that there needs to be human interaction in banking. One of the Google example with the telephone call, if any of you haven't seen that, it's definitely worth, have a look on YouTube, where the Google Assistant basically makes a appointment to a hairdresser. And it's phenomenal. You wouldn't believe it was a computer talking to a human being. It really is amazing. But look, I think there is still absolutely a place for humans. There's the place for human decision-making within banks that simply machines cannot do. They can provide the analysis, they can crunch the data probably far better than we can. But when it comes to actually decisions in terms of whether to give credit, for example, I don't think a machine can necessarily do that. Maybe on a small transactional basis, but when you're getting to large lending and other things like that, then no. Talking about the Wells Fargo example, how do you protect the customer when you open up your data and make it available? Well, this is a really good question, and I guess it's the tension between, in a way, data and data being open and available with the customer's consent, and actually what happens to that data and how it's used and manipulated. And I think this is always, as I say, a real tension between what's available in terms of you as a customer out there and the services you're offered. We have to consent to it as individuals, I think, is the first thing. If you consented to it, you also have to realize that your data could be used for other things as well. There was a great example that I came across in terms of not relating to banking, but in relating to personal data, which involves a very sober subject of cancer. There are certain cancers that the initial causes, initial symptoms, people put into they're suffering from them at a very early stage. They put into Google or whatever it may be. I've got a headache or I've got blurred vision or whatever it may be. And Google has been able to show that by understanding that's you putting that data in and linking up all those bits of data, it actually, through its own artificial intelligence platform, can say to you, look, actually, Nick, you've entered a number of things here that may suggest that you might want to go and see your doctor. Now, you might think, oh, wow, gosh, that's too much intrusion into my own personal information. But actually, with things like cancer, the earlier you treat them, the more likely it is that you'll have a better health outcome. So I think we've got to decide as a society, as individuals, about whether we want that really open data, sharing that data, or we would prefer something that's closed. But in my mind, it's got to come down to your own personal choice. How comfortable are banks with crypto assets such as XRP when it comes to cross-border payments? Yeah, this is a really good question. So we at ADGM have launched our crypto asset framework. So we're just in the process of licensing the first exchanges, digital custodians, and brokers on crypto. And we believe we've got the first regulatory crypto regime in the world. I know others are close behind us, and we really welcome that. So for banks, I think personally, and I've seen this as well because we've had numbers of meetings with the established banks who are all interested in our regime. They all know that they need to put a toe in the water, right, for the established banks. They need to understand this technology. They need to have a stake in the game as well. And I think what we'll see over the next 3 to 4 to 5 years is some of those big established institutional players all starting through joint ventures or through other means of coming into that space to really understanding the technology and also the benefits that it could bring. Should I take one more? How much time have I got? Both. With the push towards digital channels, will the risk management practices with regards to onboarding customers be neglected? That's a really good question as well, and I think I don't want to front run the announcements that are happening later today or tomorrow in terms of eKYC. But certainly ADGM, eKYC is something that we have really felt passionately about being able, through the digital medium, to onboard clients as efficiently as possible, to be able to share that data. Instead of me going to my bank with my passport or whatever documentation that's available, through things like the blockchain, being able to store that data on myself so that I can interact with financial services firms in a much more efficient and seamless way. It's got to be good for me because I don't want to go down to that bank branch with my passport, and it's got to be great for the bank because they'll cut costs. And it's also got to be good in terms of risk because you should have a much better idea. We have a digital identity and your documents are held digitally on the blockchain and fully trustworthy. You've got to get better outcomes. Okay, so last one. How many fintech startups are you currently are you currently investing in as ADGM? So we don't invest in the fintechs, right? Just to be 100% clear, that's not what we do. What we try to do is bring people together. We try to bring investors together. We try to bring the fintechs together. So we have an innovation center at ADGM where we partner with Plug and Play, the big US West Coast VC fund on technology. We see our role as trying to bring people together. It's not our role to pick out the winners or the losers. If it was, and we could pick them out, we'd be fantastically wealthy. But that's not our role, and it's not something that we're necessarily fantastic at. What we should be good at is bringing that ecosystem together and enabling that ecosystem. I think that's it, Maya. Okay.
Other than the ones you put on SlideCom? No.
Okay, thank you very much. Thank you.
Thank you.
Thank you.